There's an IRS form almost nobody fills out, and skipping it can cost you up to $1,000. It rewards something millions of people already do: save a little for retirement. It's called Form 8880, the Saver's Credit. Let's break it down. So what is it? It's the Saver's Credit, officially the credit for qualified retirement savings contributions. In plain English, if you put money into a retirement account and your income is modest, the government gives you a tax credit just for saving. Most people have no idea it exists. How much? Up to $1,000 if you're single, or $2,000 for a married couple. And this is a credit. It cuts your tax dollar for dollar, not just a deduction. That makes it far more valuable than it sounds. And here's the form itself. This is Form 8880. Straight from the IRS, line 12 is the payoff. Your credit for qualified retirement savings contributions, which flows onto your main return. 3 short lines stand between you and that money. Here's how it works. The credit is 50, 20, or 10% of up to $2,000 you contributed. $4,000 for a couple. The lower your income, the higher your percentage. At the 50% rate, a $2,000 contribution can turn into a $1,000 credit. Who qualifies? It's built for low to moderate incomes. For 2026, it phases out above roughly $40,000 if you're single, and about $80,000 for a married couple filing jointly. You also have to be 18 or older, not a full-time student, and not claimed as someone else's dependent. And what counts? More than you'd think. Contributions to a traditional or Roth IRA, a 401k, a 403b, a 457 plan, the federal thrift savings plan, and even ABLE accounts. If you chipped into almost any retirement plan, you may already qualify. And here's why it's such a good deal. This credit stacks. If you got a deduction for a traditional IRA or a match from your employer's 401k, the Saver's Credit comes on top of that. You're getting rewarded again for the exact same contribution. One honest catch: the Saver's Credit is non-refundable. That means it can wipe out tax you owe down to zero, but it won't pay you beyond that. So it helps most if you actually have a tax bill. Still, for a lot of working savers, that's hundreds of dollars they're leaving behind. And one heads up, 2025 and 2026 are the last years for the Saver's Credit as we know it. Starting in 2027, it becomes the Saver's Match. Instead of a credit on your return, the government deposits money straight into your retirement account. So claim this version while you can. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so the rules you're hearing are checked against the IRS sources. Always educational, never advice for your specific situation. So the bottom line, if you saved anything for retirement and your income is modest, look at Form 8880 before you file. It's the form almost nobody reads, and it could hand you up to $1,000 you already earn. This is general education, not tax advice, so check with a pro. Subscribe to the Tax Breakdown for tax rules in plain English.